What is going on, traders? If we're looking at this euro dollar chart, would you say that this is a pretty big candle? This candle itself moved about 60 pips today. It hasn't closed yet, but chances are we'll close down here towards the bottom of this candle, and we will have moved over 60 pips in one day on the euro dollar. Now, one of the biggest questions that I get asked as a professional trader is how, Stephen, how do I capture moves like this, candles like this in the market? Well, directly after the intro and disclaimer, I'm going to share with you a practical way that you can create a consistent plan, a consistent strategy around taking advantage of moves like this, how you can get involved at the beginning of this candle in order to capture profits on the way down. I'm going to share an entire way that you can have a proven system of doing so directly after the intro and disclaimer. Along with that, in today's video, we're going to take a look at the top 5 major pairs. I'll show you my predictions on those pairs and what I expect out of them, along with how I plan to trade based around that information. So if all that sounds interesting to you, all you have to do is click that subscribe button and the notification bell to the right hand side below this video to be alerted when we come out with content like this every single week. Click that like button to help support the channel. Follow us over on Instagram to be a part of some of the challenges we come up with. And I will see you directly after the intro and disclaimer to share with you how to get involved on large candles just like this. See you in a second. Okay, traders, welcome back. Let's go ahead and dive into how to capture really big moves out of the Forex market. And here, the example we're going to show is on the euro dollar. Most of the time, and what you'll see later on in the video, the analysis we do is broken down from a daily chart down to a smaller time frame. That is called top-down analysis. But what I'm going to discuss today is totally different than top-down analysis. The reason is because you may be saying that you don't want to go through the effort of coming here to the daily chart, checking trend and structure levels, then dropping down to smaller time frames and trying to trade in those levels. What if you said, Stephen, I'm a simple person. I'm a simple trader. All I want to know is how to capture big ass moves. Moves like this one right here. That was the weirdest arrow ever. But moves like that. If that's the case, then make sure to stick around. We are going to talk about exactly how to do that. And in doing so, I'm going to drop down right now to the 4-hour time frame, and what we are going to do today essentially is build an entire strategy and an entire system that you can test and validate through market data that will teach you or show you and give you an idea as to how to get involved on market situations that look like this right here. Some of the biggest moves. That's what you want to try to capture, and in doing so, you have to have rules in place in order to capture those moves. These rules combine to give us what we call a strategy or a system. So with that being said, let's go ahead and dive into the strategy or the system we're going to talk about today. This is going to be a breakout strategy, but don't leave the video if you are an intermediate or advanced trader and you think that all I'm going to do is tell you to trade breakouts. As you know, if you've seen our content before, I believe in giving the most value possible. So in no way am I going to leave you with the simple explanation of trade breakouts. Instead, we're going to build an entire rules-based objective system for capturing the largest moves out of the market. So stick around. A breakout, for those of you who do not know yet, more towards the beginner stage of your trading career, then this is what a breakout may look like, considering that these black lines are candlestick charts. A breakout would be a situation in the market where the market comes down to a level, creates a level of consolidation or a level of support, and the reason we know this is a level of support is because it was a swing low once and a swing low yet again. So that's going to be 1, 2 times tested as a level of support. Trading that breakout means we would want to get involved as soon as that level is broken. Now, that's the simple version of a breakout. What we're looking at today is advanced rules for taking this concept and proving this concept. Proving the concept of we want to trade breakouts by creating rules around that concept, and then we're going to do a few tests and historical data. I may do a live trade with this as well. It's getting a little late in the afternoon. It's already almost 4, so I may not have the opportunity to do that, but I will take you through historical data and show you this. But essentially, this is what we're going to be looking for. We're going to be looking for a move down or up. We're going to use a downtrend as an example. Here, let's say we have a swing low candle. After this swing low candle, what we want to see is at least 2 green candles from this swing low point moving in the upwards direction. When we have at least 2 green candles coming up, then we're waiting for the market to come down, retest this area, the area where the wick is, from the body down to the wick, We do not want this next candle to close below the wick because that signals trend continuation and is not consolidation. But what we do want is the wick of this next candle to at least touch the bottom of the body of this candle here, this first initial test. So that might look something like this. This would be a totally fine situation, right? So stay with me. I know we might be getting a little complicated, but at this point, what we define this as is our level of consolidation, our support level of consolidation, right? And if we have this support level of consolidation, what we're waiting for is the market to then, and at this second test, this is something I did just forget to mention, at this second test, you want to see 2 green candles coming up from that level too. So if you haven't noticed, what we're doing is defining swing lows with a 2 candle pullback. So we have a 2 candle down, 2 candle up situation. At that point, if we see 2 green candles coming up, we define this as the next swing low. When we have 2 swing lows that touch and that the first one has not been closed below, then we have our level of support for this period of consolidation. So at this level of support for this period of consolidation, what I do and what I'm going to teach you to do in this video and what you're going to go through the markets and test if this is something you plan to use is I put a horizontal line at the lowest body of those 2 support levels. Or if it's more than 2, it can be 3, 4, it doesn't matter how many support levels there are. I put my horizontal line at the lowest body of those levels. Once I have a horizontal line at the lowest body of those levels, all I'm doing is waiting on a breakout candle of that. So to go through this really quickly one more time, we're going to be waiting on a pull down, a swing low to be created. We define a swing low. We're doing rules. Write these down. You have to have rules in place. Otherwise, there's no way to validate this in historical data, and you'll be confused when trading it live. So remember to have rules. We have a 2 candle pullback up. As long as we get 2 green candles from a swing low, then it counts as a swing low. We then wait for a pullback to retest this zone right here. As we retest this zone, we cannot have a body close below the low of this first test, and we cannot have, and we have to make sure that it at least touches this level. Now that we get this candle, we have to wait to see if we get another 2 green candles pushing up. If we do, we have our area of support, and our horizontal line would go on the bottom of the body of the lowest body of that support level. With that being the case, we would be waiting for the market to push down and give us a breakout candle. This is a simple version of what I'm going to be showing you, and we're going to take a look at an example on the chart now just to make sure it's extremely clear. In this example on the chart, what we're going to look at is the fact that we have a move down. We get this move down, we get to a swing low right here. We then have what? 2 green candles coming up. So this is going to qualify as our first swing low. We then get a push up, a push back down. Does this push down come with 2 red candles? Remember, we need 2 up, 2 down is what we're classifying as a swing level. It does not. From our swing high here, we only have 1 push down red candle. So then we would be waiting for the market to push down. Again, we want to see a test of this area right here. Do we get a test of the area? Yes. Is this qualified as our second swing low? The way we know that is by looking to see if from this swing low, we have 2 green candles pushing up. Right here, we have 1, 2, and 3 green candles pushing up. So this, in fact, would be swing low number 2. We have swing low 1. We have swing low 2, all based on rules. All based on rules we've already set forth. With that being the case, the lowest bodies is right here, is the lowest body of that swing level. And what we would be doing is placing a horizontal line on the lowest bodies of this level. Now that we have that horizontal line placed, we wait for the breakout candle, or I wait for the breakout candle. In no way am I telling you to go out in the markets and just blindly trade this. Again, this is just something you can take, test through the markets, and validate yourself. That's exactly what you need to do, and we're going to walk through doing that in just a second. But this would be the entry candle if you were trading based on just the close below the lowest bodies of the swing level, the breakout of the lowest low bodies right here. If that's the case, that would be your entry candle. Stop loss could go above the previous swing high. Targets could be at, the way I like to do this is the targets being at the previous level of support, which is right down here. So that might be where I would put targets, or it would be where I personally would put targets on a strategy like this. You can decide where you want your targets and stops to go. My stop would be above the previous swing high. As you can see, that sets up for a very good risk-reward ratio to capture a really big move out of the market. Now, we're going to do something really interesting at this point. Now that you have a little bit of a grasp of this strategy, is I'm going to go ahead and go through some historical data and look at this. Let's bring it back to, let's say, May. Let's go back to right here. And what we're going to do is do replay mode. So we'll go replay mode from right here, and we're going to take a look at the market as it pushes forward to see if we have a situation where we have a breakout scenario. Right now, where price action is, we know that we have a singular low right here. The reason we know that, we have a push down, a swing low, followed by 2 green candles pushing up. This classifies as swing low numeral uno, swing low number 1. So with that being the case, we're looking for another swing low to come down here and test it. And we now have a swing high right here. If we get another red candle, hold on just a second. Yeah, okay. So now what we have is a swing high possibility right here. With this swing high being the case, we're waiting on a retest of this with another at least 2 red candle pullback. This is going to be the resistance level we're looking for a breakout from. If we get another test of this support level with a 2 green candle pullback up, then this is going to be the support level we're looking to break out of. This is the resistance level we're looking to break out of. If we get another test, we're going to keep pushing the market forward to see if we get that second test at either of these points. Here we have the second test of this resistance level. We have swing high 1 right here. Remember, it's because we tested this level. We have more than 2 candles coming down. We come up, we test this level again. We have swing high 2 because we have a test of this level right here. Then we have 1, 2 red candles pulling down. So this now qualifies as a swing high that we are looking for the breakout out of. So let's continue pushing price action forward. There's the breakout candle right here. So this would be our breakout candle. Our stop loss, if you were trading in the way that I've just now talked about, or testing in the way I just talked about, this would be our trade setup. We'll do a black line here for our entry, which would be right here. And the stop loss in this case would be below the previous swing low candle. And for targets, we would be looking for a 1-to-1 risk reward, at least a 1-to-1 risk reward, but we want to take targets somewhere around the previous resistance level, which would be right there. That gives us right at a 1-to-1 risk reward. We've already entered the trade. We have our stop loss set. This is the parameters of your strategy to capture as much movement out of the market as possible. And what we do at this point is just sit and wait. That's the beauty of having a rules-based system. Now we don't have to worry about the trade. We have everything set in place for our stops and targets, and we're just waiting to see which one gets hit. There we hit our target. There it is. Beautiful trade. We ended up hitting targets. And we're going to do now is fast forward to current data. Go ahead and get to the current data, and I'll show you guys one more example of this. Let's go to current data, and another example of this specific trading type, the specific trading strategy would be an area that I already see right here. So if we come up to this area, we have our swing low, we push up to a swing high. Why is this right here a swing high? Because we have more than 2 red candles pushing down. So this would be swing high 1. We then pull down. Do we have a swing low 1 right here? Yes, because we get a swing low, more than 2 green candles. We push up to another swing high right here, but this swing high, and actually that is right around the area, so that would be another swing high. So this would be swing high 2. We then push down, we get swing low 2. At this point, we are either trading the breakout. In the specific scenario of this breakout strategy, we are trading the close above breakout of this high, because it's the highest high of the swing highs, or a breakout of this low. The reason for that is because these are the lowest bodies in the 2, swing low number 1, swing low number 2. Out of those 2, these are the lowest bodies. We're trading a breakout of one of those 2 areas, right? We get that breakout right here. So here's the body. Here's the candle that breaks that and closes below it. It is just by a few pips or just by a pip or 2, but that counts for me. That is a breakout. With that being the case, your trade setup would look something like this. You would have a entry right at that break. If you were trading and testing the same way I do, you would have a stop loss above your previous level of structure resistance. Your target, if that creates more than a 1-to-1, which it doesn't, so your target would actually be, for me, it would be the next level of structure support. So the trade would look something like that. Again, giving a pretty good risk-reward ratio at 2.4. So trading breakouts, not just trading breakouts. Again, I'm not going that simplified with this explanation, but trading breakouts with very specific rules that you have a great starting point now. You have a great starting point for rules for a breakout strategy that can allow you to capture huge amounts of momentum out of the market. That strategy is what I just taught you. Now, do not take that strategy and go trade it blindly. Take the rules you just learned and go through the markets and test them. Test this for a year. Test it all the way back to mid-year of 2018. Comment below with what you come up with and let me know, is this going to be profitable for you or is it not? Right? The only way we're going to know that is if we test. If we test the information. I have tested this breakout strategy that I've shown you, and for me, the way I see the market, it becomes out profitable. It comes out to give me an advantage over the market. So with that being the case, you now have a rules-based system that you need to test to see if the way you see the market's the same, and if you end up with a rules-based system that gives you an advantage, that gives you an ability to take advantage of markets and beat them, an ability to take advantage of the market and consistently place trades based on breakouts and consistently win more than you lose. If it does, based on your back-tested data, after you go through a couple of years of data testing the situation, then that's going to give you the confidence you need. That's going to give you a rules-based tested system that you can use to trade momentum in the market. This is one of my favorite ways to trade, is these breakout situations. So hopefully you will take that information and test this strategy throughout the market on your own in order to build your own rules-based trading plan, rules-based system that can take advantage of those momentum moves in the market. Now what we're going to do is delete these drawings. Hopefully, again, you took notes. If not, go back, rewatch this video and take some notes on what we just did. But what we are going to do now is actually look at the top 5 major pairs. I'm going to make some predictions on what I think is going to happen on these top 5 major pairs, and also how I plan to trade based on that information. So here on the euro dollar, it looks like we're going to put in a 1, 2, 3 move. What does that mean? It means we have a push down, pull back, 1, 2, and 3, the break and close below the previous level of structure support. With that being the case, I am looking at this as being in a downtrend if this move happens and this candle closes down here. If that happens, I'm looking at the euro dollar being in a downtrend. With that being the case, I'm looking for possible support as a counter trend play at this previously multiple time tested level of support. We're looking at around 1.1127. That's an area I'll be looking at, and the area may look more like this for a possible counter trend bounce to the upside, considering we're in a downtrend right now. In this zone is where I'll be looking for possible counter trend bounces out of the euro dollar. Now, if the euro dollar pulls back up, one of my main places to look for possible trading opportunities in the upwards direction for trend continuation, for a move back down, ironically, is if the market pulls back up into the area around 1.192. I'll be looking at that area for possible shorting trades to continue in this downtrend. So if we get a pullback up, I'll be looking in this zone for possible shorting trades. If we continue pushing down, or we get a push down after this pullback, the area I'm looking for possible long trades out of is right back here around the 1.1132 area. That's what I'm looking at on the euro dollar and kind of my expectations for this pair. And for the dollar yen, we'll go ahead and move on to this pair. We are literally just in a period of consolidation. The expectations here are really nothing. I'm not waiting for something in the sense of I'm looking to trade this pair. What I'm looking to see is if this pair comes down and breaks below this level of support, or if this pair comes up and breaks this level of resistance. In that point, I will be looking for those levels to act as support and resistance moving forward afterwards. But for the time being, for right now, I'm not necessarily looking for trading opportunities on the dollar yen. Let's move on to the Aussie dollar. On the Aussie dollar, we have a nice situation here with an uptrend. We started that uptrend right here as we pushed up and got our 1, 2, 3 move. Also breaking previous structure resistance. After that 1, 2, 3 move, I personally thought we would see some possible support out of this area right in here when the market started pulling down. We have not seen that. So the next area I'll be looking at for possible support out of this market is actually going to be, if we have another level, yeah, it'll be right here. It'll be this previous support level that's been tested multiple times, and I'll show you that now. This was definitely a support level here, support level here, support level in here, support level here. So if the market gets down to that level, it's a level I'll be looking at for possible long opportunities around 0.6963 out of the Aussie dollar. And if we come up and break through our resistance level we created around the 0.7075 level right in this area, once we come up and break above that level, if we do, then this area here will turn into my next support level for trend continuation to the upside on the Aussie dollar. That's what I'm expecting out of this pair. As for Counter trend moves were really far away is the reason I didn't really discuss this, because the next level I'll be looking at for possible counter trend moves, that is a vertical line, not horizontal, hold on just a second, is right up here. So eventually what I will be looking for if we continue higher, again, the breakout of this level will show me that we're looking to go higher in this uptrend. I'll look for a pullback to that level, and the next place for possible counter trend short trades will be around 0.72 even. And that's what I'll be paying attention to here on the Aussie dollar in the future. Next up, we have the pound dollar. Pound dollar in a downtrend. We're expecting to see this market continue in that downward direction. And let's scroll out and see where to. The where to's of where we think this market could possibly go. The next stop looks to be somewhere around here. So we have a pretty long distance, pretty long ways to go. And what I'll be looking for out of the pound dollar is to see if this market can continue down. If we do, then this previous level of support that's around 1.24 even, if we continue down and break that level, will be an area I look for possible resistance to ride down to our 1.2151 area here on the pound dollar. And that's really all I'm looking for out of this specific pair. Yes, in a downtrend, yes, I'm looking for a break of this support level, but until we do actually break that support level, there's not really a trading opportunity for me at the moment. And finally, we're going to take a look at the dollar Swiss, discuss any trading opportunities here currently on this specific pair. I'm seeing this as still in a downtrend. We have a high here. We start breaking down, breaking lows, making lower highs, and we're still in that pattern. With that being the case, I'll be looking for a possible break of this level of structure and to pull back into it, 0.97 area. Before that happens, there's not really a trading opportunity for me unless we come up and we eventually retest this level of resistance around 1.0. I really like that level. So if we get up here, that is a level 1.0 that I'll look for possible shorting opportunities, kind of trend continuation, kind of counter trend, depending on what time frame you're going to be looking at here. And that's what I'll be looking for at that level. And again, if we end up breaking down, going below the 0.97 level, then that's a level I'll look for possible retracements into for trend continuation moves to the downside out of the dollar Swiss. So there is some practical steps towards making a breakout trading strategy that can capture very large moves in the market, testing that strategy to validate it in previous data, which is a pivotal point. Again, do not go take that strategy you learned earlier in the video and just trade it blindly. Go test it through historical data. Make sure it creates a viable trading plan and successful trading plan for you. And then from that point, you can decide when you're ready to go live after all of your testing, which is completely necessary. Never forget that. Now, with that being the case, I hope you have liked this video. If so, make sure to smash that like button for me. Make sure you're subscribed by clicking the button to the bottom right-hand side below the screen. If you're interested in any other free material, we have multiple videos listed in the description, along with some of the free trainings we offer as well. And in the description, you'll also find a couple of different paid programs that we run here at the Trading Channel. And if you would like to learn more about those, all you have to do is click those links. Otherwise, totally fine. Again, make sure you're subscribed. I hope you have a great rest of your trading week. I hope you have a great rest of your trading year. I cannot wait to see you again in the next YouTube video. See you there. Talk soon.